Hello, everyone. This is Brian Beamish coming to you again, the Canadian Rational Investor, CR Investor on Twitter and TradingView, with our Bitcoin summary for Friday, June 20th, 2014, the longest day of the year. Hope everyone's doing well. I suppose we'll just start off with, we're trying to keep these about 10 minutes long, so I got to move pretty quickly here. This is the website if you want information about me and the things that I do. Feel free to pop on over here. Lots of free information, and there are a couple paid features, but for the time being, for you Bitcoin people, basically everything that you need here is for free. As well, if you would like to reciprocate and you like the video information, damn, I've given you some pretty good levels of late, feel free to help out my cause to build my Bitcoin fund. You guys have done really well helping me out. I'm up to about two and a half coins now, so I'm really super stoked about that. You can donate here. Just click on the button, boom, away you go, and up comes a link and up comes a wallet. So feel free to pass along some good karma if you think you get some good value out of this. All right, on to the Bitcoin charts, and I thought just we'd start off today looking at the big picture. This is the daily chart on Bitfinex. I like to follow the Bitfinex. That's where I have my money working. And this is TradingView.com's charts. I have I guess, a following there of about 500 people. You can see the same logo as the website. So, if you are looking for charting services, these guys aren't so bad, and a lot of the stuff that they do are for free. All right, so just looking quickly at the daily chart, let's put all of this into perspective. Here was our last big bull run, breakout at 150, ran up to 1100. We always ask ourselves, well, at $1,000, would institutions be interested in buying? The answer, simply put, is no. Where would they buy? They will buy between the 61.8 and 78.6 fibs, or basically the OTE long zone. And sure enough, every time you see the market dip down into this area, it quickly moved away. And what I found really interesting was through this April low here, basically the public had lost all interest in Bitcoin. And, we were doing Bitcoin shows and all that kind of stuff, and it was very quiet. And ironically enough, that was basically the bottom of this trading range. The institutions were probably just absolutely loving that. And as I said, the public just wasn't that interested. So we rallied away from those levels, and I've been referring lately, in these 4-hour charts, I've been talking about the year-to-date chart, and to me, I think that's still very much a handy reference guide. So if we just pop on over to the 4-hour chart, then right now we see that. Back in January, we were up near $1,000. We came down to 340 here. Nice simple technical analysis. This is one of the first technical analysis tools I ever learned, was called the 50% rule. And it basically says the markets like to bounce 50% of their previous move. And that's William Gann. You can, Gann, you can look that up on the internet if you'd like to do some more research on that. But long and short of it here, you can see here's our panic low 340, and we worked ourselves up to the 50% rule. So not a big surprise what happened there. Now we ask ourselves, if we're institutions and we're thinking about shorting Bitcoin, maybe we have a bearish scenario above, a certain level. Where would the institutions most likely do it? And of course, here is the 61.8 to 78.6 fibs, or basically about 758 to 850. And I think I just point out here that, we're always talking about market structure. We want to sell when we see things that look like M's. And what a coincidence, you can see a very well-defined M, and it just so happens to be right in that OTE zone. So, it kind of makes sense that if I'm an institution, if I'm going to short Bitcoin, I want to short against market structure. And there was your last major breakdown, which just so happens to be right in the zone. So put it all together, not a big surprise, we're working our way higher. You know, we have a key level here, this I think it's 719, I can't remember, that probably is in play right now. It ended up being too much for the market to overtake in the short term, but we'll see how it goes. Maybe things will clean themselves up. All right, so moving in on the 4 hour, just getting a little bit more focused here on the short term. You know, just a couple things that I would point out. I'm a big fan of harmonic patterns, and you know what I would consider is that this is your dead cat bounce off of that 340 panic low. And so if usually these things actually come in twos, and really this is only like half of the move. So the question is, where's the other half going to come from? And all I really do is just take this line and clone it, boom, and then I just project that line right off of the next key low. And gee whiz, there's our bullish ABCD target right there. Right? See how I did that? And what I find really interesting is, sure enough, we rallied right up into that area. There's the 50% level, Mr. Gann. There's that old key high. So, you know, even if you had a nice target window up in this area here, it could even be pretty wide. Long and short of it here is you're never going to know exactly where the market's going to top out. But that's a pretty good indication that this was an area to be taking profits, not maybe even thinking about buying more, but taking profits in that area. So a question I asked myself was, okay, last correction period or duration, let's see, let's make that look pretty there for you. It started in middle of April and went on into early May, and that was where that low was put in. And so all I've done here of late is just said, okay, well, if that's the last correction and Bitcoin is obeying harmonics fairly closely, what would that imply if we project that same correction duration off of this recent high? And it looks to me like this correction duration is probably going to come to fruition somewhere around the 21st, 22nd of June. So that's just a few days away now, and you can see how this correction has sort of played itself out. All right, so let's zoom in a little bit more and see what's actually happened here in the short term. You know, if we take a look at the market from the institutional perspective and we say, all right, if we believe that this is a bottom and that this was a nice reversal, rejection of a move lower here, and I was an institution, where would I consider buying, right? And so that's what this fib is here. And this green box, of course, is our OTE long zone. So this is basically where we would expect institutions to be buying. You know, the 38.2 fib is what I call my first stop target. So not a big surprise that market came down to the 38.2 and dead cat bounced away from there. You know, if we look a little bit, zoom in a little bit closer, we can see that the market tried to rally and recapture this downtrend line off of the top here, tried to get up into the optimal trade entry short zone off of this sell-off, and just couldn't make it. And we'll get to that in a moment, but long and short of it here is that's bearish in itself. You know, a couple concerns going forward here. We just had a bearish moving average cross. Willie just came out of a stupid overbought condition, so you can see he's in the process of cleaning himself up. You know, really for me to get super bullish, I want to see market structure turn bullish, so we're just starting that process now. And we just came off a bearish MACD divergence, so this divergence has to clean itself up as well, and you can see it's going through that process as we speak. All right, so that gives us a pretty good idea. You know, we might get a face plant down here into this OTE. You can see we have a potential bearish flagpole. Excuse me, ABCD pattern, you know, very similar to this original bullish ABCD pattern. Well, you know, the bear, it works exact same. just in the other direction. And if this is indeed our initial burst and this is our continuation, then basically that paints a target down comfortably in this OTE zone. We do have the original double bottom breakout level here. What a coincidence that just so happens to line up with that. And we also have a 61.8. This is lots and lots of reasons why I could see price come down into this window. In the short term, in yesterday's video, and we'll get to it in a second on the 1 hour, I've been sort of painting how we have these trading ranges, and you can see how we've come down to this trading range, and now we're bouncing off of it. My hunch, especially whenever you get a moving average cross, you usually get a counter trend move away from that initial cross direction. So I think that's what's going on now. So let's go take a look at the 1 hour and see what that looks like. All right. So zooming in on the 1 hour, and I think we'll finish off today's video with this. Last post I had said the dead cat had bounced and played itself out, but now what? So, here's the panic low. We got all the way down to 522. Dead cat bounce back up into resistance. If I was an institution and I was thinking about shorting, where would I most likely want to short? That's the OTE zone off of this range. 622 up to 650. You can see the market tried to work its way up here, and I remember a few videos ago I had said literally it was a flip of the coin whether we popped up here into the OTE or we rolled over and came back into the OTE long zone. You can see what's happened. We slowly head faked our way up. We hit this moving average off of the top and the 200 period moving average and the trend line off of the top, and that was just too much for the market. You can see on this breakout we really did not do much in the way of momentum. Willie's just rolled over, couldn't even get back into the stupid condition, and now, market structure again, we've put in a double top breakdown here. I remember at the end of yesterday's show, just at the very end, I drew these red lines here, bearish ABCD pattern, so you can see how that's played out. But what I find really fascinating is when I woke up this morning, and I remember I always make reference to this, and I remember I made reference in yesterday's video, I said just watch the 38.2, this 582.37. It was right up just underneath some key lows here. I figured that there's probably some juicy stops that could be hit just below this key low here at 595. It looks like somewhere in there, 587. Then there were also another few key lows here, 582, 585. So if there was going to be support, it would be down right around this 38.2. And so when I woke up and I put my cursor over the low bar this morning, look at the number that's registered, 582.37. So basically the market went exactly to the 38.2 fib and then bounced away from it. So that's very, very typical. As long as we have this bearish market structure, I could actually justify being short from 601.50, and I had put out a tweet yesterday afternoon that I had figured the market had broke down at that 601.50. So we basically broke down. We've worked our way lower. Really shorter term time frame traders, you probably should have taken profits there at that 582.37 level or around there. And looking to reload. I suppose if we pulled up a 15-minute and did an OT off of that, the short level is probably somewhere right around the trend lines here. So put it all together, we did have the dead cat bounce. She bounced. We have a fundamental event coming up here on the 27th, this auction of all of these Silk Road coins. I think, on balance, this trading range idea I think is still perfectly valid. We've come down and tested the low end of the range. We bounced away from that. We've got a lot of resistance now, not only market structure, but trend lines, moving averages. You can see the trend in OBV as market structure is down. We do have a little smattering of a bottom here on the MACD. looks to me like actually we do have a bullish divergence here working on this MACD indicator. So that needs to clean itself out before we can start really tanking lower in earnest. It looks to me like Willie, yeah, Willie did actually get a little stupid there. So again, you know, more justification for us to look for a bounce. Got to get Willie out of there if this is a bear and we're moving lower. Really, my hunch here again is we're in this trading range. This 38.2 fib was worked beautifully, and now simply put, if we break down through this 38.2, then clearly my target has to be the OTE zone. So just to finish off today's thought, this is basically a bearish structure right at the moment. We're testing the 38.2. Should I start to see some bullish market structure come in, my opinion may change. But until this fundamental event on the 27th occurs, that being the Silk Road auction, my upside objectives are relatively limited, and my feeling is that we could actually do a bit of backfilling now into this OTE. You know, it's too early to tell right now, but based on market structure and how the indicators are looking at the moment, I think we're still a little bit early on calling a bottom. But we'll see how it goes. For now, stuck in a trading range and a resolution below the trading range. Our next stop should be the OTE zone. So have yourselves a great day, and I think I'll probably take the weekend off, but if something significant develops, then maybe I might post something. All right, thanks a lot, everybody. Have yourselves a great day, and bye for now.